Hey guys, Steve here for your strategy session for July 30th, 2014. We had an interesting day today in the three indices. Really choppy action. One thing I want to go over with you right off the bat is, again, if you don't follow me on Twitter, Stock Twits, definitely make sure you do that. Only for the reason that I put out a couple tweets today, and I really discussed what we were looking at, or what I was looking at in the ticks, and again, it's not something that I use to trade off of or anything like that. It's just really something I use to really determine the strength of the moves in the market. And today was a completely different scenario than what I had talked about the other day. I think it was maybe Monday, about how the ticks were pushing to negative 1000s, but they were closing close to the zero line. Today, on the other hand, we were pushing to the negative 1000s. But as you can see, we had a couple pushes well past negative 1,000, negative 1,200 here at 9 o'clock, negative 1150 at 145. So definitely some more bearish action in today's market than over the last few sessions. And you can see here, if I show you this, all of the day's action was really up until, let's say, right here, which was the lunchtime hour. All the bars, look at all the candles, all the bodies of the candles, these filled in or hollow areas, are all below zero. So the bulls would push it up and it would get slammed right back down. Push it up, slammed right back down, and sold right in their face. So really, this was a day, if you were going to in the morning, that you would be selling the rips higher instead of buying the dips. That, this right in here was the section, was kind of right before the Fed minutes came out. This is where the Fed minutes came out, right here at 2 o'clock. And then, again, sold right back down, pushed to negative 1,000. And again, to finish out the day, all the candle bodies below zero. So there was actually 1, 2, 3 closes. And I don't know how many 15-minute bars make up a day, 25 maybe, that were above the zero line. So it really shows you the difference in the action today as compared to the other day. So just, again, something to look at, something to gauge, the market strength on, something I look at, and I'll continue to kind of post those tweets just on what I'm seeing. Some people trade differently, some people day trade, some people swing trade. So, that's just something I look at for my own benefit, just to see really what kind of market we have and the strength of the move that we're getting. So anyway, back to the S&P 500. That one was really, we're really back in the middle of the range, moving sideways. We're allowing this 50-day moving average to catch up. Again, 50-day moving average being the average price over the last 50 days. So hopefully that'll act as support as we move sideways here. The trend line is also still, I would say still intact, but we're starting to break it to the downside. The Nasdaq obviously being the the stronger of the three indices that we follow. So again, we had our breakout along this trend line. We had our push higher. And now, instead of pulling back like the S&P and the Dow are, this one's actually just moving sideways. So on a relative strength basis, the Nasdaq is the strongest of the three indices. And the last one being the Dow. Dow really breaking trend line, testing the 50-day. It's the only index that is back at the 50-day moving average. So this level really should hold. If we're going to get higher prices, we can't have the Dow going one way and expect the S&P and the Nasdaq to continue going the other way. It's too much. It's just too much pressure, to not have all three indices following suit. So we're going to just take a quick look at our positions now. We are going to get an exit, I believe, in Mondelez, so we'll hit that last. So Apple, really just moving sideways. Still within this one breakout bar from the 28th. We had a little bit of a down move yesterday. Today, again, a move down, but closed back in the middle of the range, well above our support. And this consolidation still above trend line support. So just let Apple work. There's really nothing to do with Apple. ADM on the free trade side, we're going to actually book a small, very, very small profit, almost more like a scratch in the trade. For us, we're going to hold it just because our support is really down here at this 50-day moving average and lower trend line, and also previous resistance from the consolidation area, this gray box. So a lot of price action was taking place in here, a lot of buying. So the intention is that if it came back, buyers would get a second chance to rebuy, and then it would bounce higher. So, but for right now, the free trade was much more of an aggressive style of trading. So that side of it is going to take profits. But like I said, the uptrend is still intact. Really, until this 45.22 level breaks, the uptrend will remain intact. American Tower reported earnings before the bell. This was our one bright spot today, I guess you can call it. We did have a couple other stocks that were up, but up 4.22%. I'm glad that at the end of the day, that American Tower actually did come back and close closer to the top of the range. Throughout the trading day, it was really down here at this 94, 95 level, and I was afraid that we would, maybe that would produce some more selling tomorrow. So actually, for American Tower, with the way this trend line is drawn, we can raise stop to 92.02 here. If my little arrow wants to drag it, she don't want to drag. Well, anyway, I'm telling you, since the computer doesn't want to react, we're going to actually raise stop to right there. Let's try it one more time. Can't make it up. Anyway, so we'll raise stop up, basically because at this point we would be, again, breaking trend line, breaking this small little consolidation low. So we'll be able to lock in some profits with moving that stop up. So that's what how we're gonna proceed with American Tower. Air Products, really, again, still moving sideways from this big long breakout from the 23rd. Still moving sideways, so we're really, that's a good sign for us. We would like to see this move sideways for maybe another week and then pop higher. Then we'd be able to actually, if we're going to continue to use this aggressive trend line, we'd be able to actually move stop all the way up here to 134.50 and trail that stop up real tight, just because we're going to potentially be below this trend line. If it moves sideways, we'll be able to be below the trend line and support. EQR was also up 1.5% today. Great move. Maybe this is look at this as a potential little consolidation in there with a nice breakout today after earnings. So for EQR, let's actually take our stop. Let's see, we can move it to, right now we're here. Well, I guess this is another how do you want to trade it type of thing, because we could look at trend line through here. Okay, that's obviously the longer term trend line. Then we have more of a aggressive trend line right here, that's this yellow line here. But what I'm also looking at is, are we potentially coming up to another side of a channel? It's tough to say. It doesn't look that way, but it really depends. It's all depending on how you want to trade it. I think for now we're going to actually stay below. We're going to keep our stop here at 63.16. If you're, again, a more aggressive trader, you could definitely move stop to 64.80 on this 5 or 6 day consolidation. Let's see, Fidelity, really, basically breaking out again. This is kind of what I'm looking for from Air Products, really, how it just moves sideways and then we start to get a pop higher, and then we're actually going to be able to, depending on if we get an actual real breakout, this is very minimal at this point, we'll be able to move stop again to, let's say, this 56.24 level. So, in order to be consistent, why don't we do that for EQR? Let's move our stop here. Let's move our stop up to that level here. We'll be consistent with everything. I don't know why I can't drag my arrows. It's kind of annoying me right now. Alright. So we'll move stop to 64.80 on our trade in EQR. Honeywell, finally, not much, but a green day in Honeywell. I would have much rather seen a green open candle, meaning that the close was higher than the open, but at this point I will take any green candle it will give us. So stop still down here at 92.91. Let's see where that where we're able to go with that. Wyndham moving higher, came down, touched. So again, you know, this could potentially be, maybe our trend line's not drawn 100% accurate. Maybe the trend line's more like this. So let's see how this reacts. I think that actually may be the trend line we're going to go with, just because then we have a touch here, touch here. So then we'd have a breakout below trend line, and then potentially below the 50-day moving average as well to really confirm it. Our one position that we are exiting today is Mondelez. It's a very minimal break, but a break nonetheless. The fact that it was down almost 3% after not moving for a while is concerning. We're breaking below the 50-day moving average. We're below trendline support, and we are below the previous consolidation lows. So we will exit Mondelez tomorrow at the open. Okay, so no more Mondelez. Again, if you look at the weekly chart, really nothing wrong with it, and it could easily be coming back to this 36 level to really test the weekly trend line. But for our purposes, we are going to exit the position. Nothing really triggered today as far as what we had on from our weekly watch list that we developed over the weekend on the weekend update. So just go through a couple real quick. Sealed Air had earnings, gapped up, closed lower, still up for the day, 3%, but closed basically back in the middle of the range. Nordstrom's looks like it's getting ready. See these couple bars in here is really getting supported by the 50-day moving average. So if that were to break out, we'd be able to redraw a trend line, something more along those lines, and set a stop right here at 67.34 to exit the position. Macy's, really just back in the middle of the range. Lincoln Financial or Lincoln National had earnings, looks like today, actually after the close. LNC 53, 52. Oh wow. No, actually no. Take that back. I looked at the wrong thing. 52. Yeah, so I mean it's still really just trading around where it is. So that one really not much going on. It's close to breaking out, but it hasn't. VF Corp, still in the middle of the range, but as I said over the weekend update, I'm concerned about this downtrend line that we have. FedEx bounced right off the 50-day moving average. Again, this is one that I'm long in my personal account. My stop is right here at this 144.98, which basically is the bottom of the gap higher from earnings. So, to see this bounce higher, potentially take out these 150s, I'd be able to trail my stop up to this 147 level. Expedia, close to breaking out. That's a good looking trend line. If we can get a nice break over 82, we'd be able to set our stop right here at 77.36. McGraw-Hill, testing the bottom of the box. Genuine Parts, remember we got a failed breakout here. This was one that kept us out because earnings were coming up. So I mean, same as we had a couple of stocks, I think maybe it was Facebook, that earnings kept us out of it and it went higher. This was one that kept us out and it's worked in our favor. So it works both ways. Just follow the rules and don't try and bend the rules for anything. The one stock I wanted to just take a quick look at, BHI is breaking the bottom. Eaton obviously was down from yesterday. That's going up. Was Union Pacific. Union Pacific moving sideways. Again, I still like this setup. I think it's a great setup, but we have to get that close over 103 for it to really trigger. But like I said, basically bouncing off the bottom of the box, so we're looking good on that one. Merck had earnings the other day. Same thing, still moving sideways. And my other one from over the weekend that I really wanted to own was Conoco. Again, moving sideways, allowing average price, average 50-day moving average to come test this. I mean, this looks great, because if we can get a little sideways movement, allow the 50-day, but by the course of averages, it's going to continue higher because the last 50 days have been moving higher. So allow the 50-day to move up, hit that 50-day, bounce over 86.50, and set a nice tight stop. So that's it for tonight, guys. Leave some comments below. In the free trade, I kind of asked them how they wanted to see that one proceed, because we are exiting. Not necessarily sure if following the same stock for 20 days, 25 days was a good idea, but it was the first one. So definitely looking for some comments on and suggestions on how we should proceed with that. Maybe a way to make it better. Maybe discontinue it altogether. For right now. So, like I said, leave some comments, shoot me an email, follow me on StockTwits and Twitter, tweet me, whatever. Just like I said, give me some suggestions. I have a tough time with the S's, and we'll go from there. All right, guys. That's it for today, guys. So if you haven't already, please follow me on StockTwits, Twitter, and Google+, and subscribe to the YouTube channel. And if you liked the video, please give it a thumbs up and leave some comments below. Thanks for watching. See you next time.